there will be ups and downs. So a lot of these people can't weather that volatility too. So even if they did understand Bitcoin, they cannot go all into Bitcoin. They might allocate something to Bitcoin, but they still want that dollar value because their debts are dollar denominated.
Many Bitcoin maximalists argue that if Bitcoin is the future, then all attention should be directed toward Bitcoin itself, not dollar substitutes. But Mow pushes back against this line of thinking. Why? Because the world is messy. People's understanding of Bitcoin is incomplete, and more importantly, people's financial needs today don't always allow them to hold volatile assets.
A lot of Bitcoiners don't like stablecoins. They're saying you should just be Bitcoin only. But I don't think that's a reality that we can just hope for and expect. Because a lot of people in the world still are looking for dollar-denominated value, like stablecoins, if not the US dollar. Because in many places in the world, it's actually very hard to get dollars, either in your bank account or physical cash. And I think this is why people are turning to things like Tether. Tether's completing the last mile. They're reaching the people that want dollars, but can't get dollars necessarily. And I think it's simply a supply and demand thing. Like, in a perfect world, everyone would understand Bitcoin and everyone would just want Bitcoin, not today, but yesterday. Maybe not even yesterday, like 2-3 years ago, right? That's the perfect world. But the world is not perfect, and people's understanding of the world, including Bitcoin, is not perfect. So there are people that want dollars. And I think that's a reasonable thing if they're, say, living in Venezuela or Argentina and their own currencies are hyperinflating. They're looking for something that is stable for them. Not necessarily for us as Bitcoiners, but it's stable relative to their own local currency. And that's why they're looking for this dollar value. So I think until the world reaches a full understanding of Bitcoin, you'll still have people seeking out dollar value because it is better than what they have. And a lot of debts are also dollar denominated too. So suppliers go up the supply chain, people want dollars. So if you're doing business, you're a merchant or something, you have to pay and settle in dollars. And Bitcoin still is volatile, right? As it becomes the next reserve currency of the world, there will be ups and downs. So a lot of these people can't weather that volatility too. So even if they did understand Bitcoin, they cannot go all into Bitcoin. They might allocate something to Bitcoin, but they still want that dollar value because their debts are dollar denominated. So I think for us as a Jan 3 and the developer of Aqua, we've kind of accepted that, and we understand that people want stablecoins. They want dollar value. So we put Tether front and center in the app alongside Bitcoin and layer 2 Bitcoin so that they can transact. They can send Tether out to other chains, but they're holding liquid Tether on the liquid sidechain. So it's better in a number of ways. But you can still interact and interface with that entire digital dollar economy in your country. But you see Bitcoin there, you see the Bitcoin price, and you might think, okay, maybe I'll swap some into Bitcoin. And that's kind of the hope we have, that we tap into the 400, 500 million Tether users and get more of them into Bitcoin. And I think we're getting there. Some of our biggest markets for Aqua are Argentina and Brazil. So we know that we built something that has good product market fit, that meets their needs and gives them some benefits, because liquid Tether transactions are cheaper and private, actually. So you can hold it in liquid Tether and swap out to Tron and Polygon Tether when you need to pay someone that wants that, and you maintain your privacy. But overall, I think we're not going to see stablecoins disappear. We can hate on stablecoins.
The challenge? Liabilities in the traditional financial system are often dollar-denominated, and they're not recorded on chain. That means audits always depend on trusted third parties. In Mow's words, if you're worried about whether a company truly holds the assets it claims, the safest move is simple. Don't rely on them. Hold your own Bitcoin in cold storage.
It can be done, just like anything can be done, right? The only thing that can't be done is printing Bitcoin out of thin air, but anything else is possible. So I've talked about rebasing to Bitcoin and just setting an exchange rate of 1 sat to $1. And that just takes a politician, maybe it's Trump, I don't know, but somebody just to say, we'll let you redeem your debt for this. And that's it. I mean, how do you peg a dollar to gold? It's by decree. And pegging a currency to Bitcoin is the same. It just depends on the motivations and the necessity of doing so. I think when things get bad enough, every card is on the table, and we're seeing this, right? Some of those cards are bad cards. It's the rolling out of a CBDC like in Europe, or you know, starting to control the internet like in the UK. There are things that are happening, and you can see these things happening are a direct response to other things that they're trying to mitigate or distract you from. So there are a lot of, just take the UK as an example, there are a lot of societal problems. And now they're focusing on this one particular thing, which doesn't do anything for the other problems, but it definitely distracts and gets people enraged. But it just goes to show, like, every card is on the table now. But that rebasing the Bitcoin card is also, it's in the hands, and it can be played at any time. And that's why I say plan accordingly, because you have to be ready for when these things happen. And the best thing to do to be ready is to be in Bitcoin. At the end of the day, you really need to know what the liabilities are, right? You need proof of reserves and, proof of liabilities, but your liabilities could be dollar denominated and deeply entrenched in the financial system. So how do you audit that? There's no on-chain liabilities, right? You're going to depend on an auditor no matter what to get the full picture at the end of the day. So I think you have to be okay that, he doesn't post the reserves. I mean, he could, but it's not needed to get the full picture, because this is a security. It is a stock. You're depending on a lot of TradFi systems and controls that it works. It's not Bitcoin. And I think, he hasn't identified all of the wallets, but people outside have. So, if you want, you can kind of look and see. He's basically got all the coins, but at least he doesn't have to identify it himself, which in his view, I think I listened to clips of that. He was saying there's risks to that, right? Like, it could be targeted or whatnot. But if someone else is analyzing, then, you can assume it's accurate, but only he knows for sure where all the coins are and with which custodian. So there is some mitigation on his view of security, I guess. So for me, it doesn't really matter, because it is a stock. If I wanted proof of reserves, then I would want that from, I don't know, an exchange. But even then, you don't know what the liabilities are, right? So I'll say it again, like, the best thing is just have your own Bitcoin. If you're worried about some entity, some company having reserves, it means you have some exposure there and you have some risk. And if you're not comfortable with that, then don't be in that and sit in cold stored Bitcoin, and you have your own proof of reserves. I would have thought that the ETFs opening the floodgates combined with strategy would have gotten us there already. And this is why I'm one of the believers that there is paper Bitcoin out there dampening the market. So we'll see. But, nothing stops the train. It's going to go. The dollar is going to keep on inflating, and Bitcoin is going to keep going up. It's just a question of when it all converges.
Bitcoin is the endgame. It's the only asset that cannot be printed, inflated, or manipulated in the same way as fiat currencies. But along the journey, stablecoins serve a critical role, meeting people where they are, giving them access to dollar stability, and gradually guiding them toward Bitcoin adoption. Mow's approach through Aqua illustrates this bridge beautifully. Combine the practicality of stablecoins with the inevitability of Bitcoin, and you create a system that accelerates global adoption instead of fighting against human needs.